Okay, so because I cannot predict the future, I can tell you what happened in real estate world last week, but I can't predict the future. So let's go through last week in the real estate world. Charts can be manipulative. I saw mortgage lenders showing rates dropping last week. And I think you just need to understand why. Interest rates and market volatility. Here's what happened. On Monday, there was this unease, this fear, because the Federal Reserve Chairman Jerome Powell had been placed under an investigation. What that did is it caused everybody to be afraid that maybe the Federal Reserve had lost its independence. And that caused rates to go up on Monday. Now, when things corrected Tuesday, Wednesday, Thursday, people were able to say, hey, rates fell. I, I can't do it. I don't like it. It's not the right thing to do to just pretend like rates are having these great free falls when in reality, what's happening is there's tiny little movements. Monday's jump was a little bit significant, but what happened Tuesday, Wednesday, Thursday was just a correction from that. Okay, so consumer inflation, it remained steady in December of 2025. That caused, because it was still above the Fed's target, it still causes some affordability concerns for many Americans. If you're looking at the grocery store and you're thinking prices are going up, I don't know if I can afford it. That's what other Americans are experiencing today as well. Wholesale inflation was softer than expected, but remained stubbornly high. What does that mean? Well, it means that inflation's not correcting itself fast enough and it's not going to be gone tomorrow. Retail sales remained high. They increased in November by the most since July. What that does is it suggests the economy is maintaining its strong uh, pace in spite of the in spite of the fact that we feel like the economy is cooling. Um, the numbers seem to indicate that it hasn't really cooled like we think as of November of 2025. Now, there's some unclear things going on out there, and so you can't trust all the numbers completely, but that's kind of where we're at. New home prices. Now, this is significant and worth considering. New home prices hit a 4-year low. And I found myself wondering, it's 8% down from just a year earlier. That was in October of now. So you say, Josh, why are we talking about December, November, October? I feel like we're going backwards. Well, when reports come out, we're always getting trailing data. And that's why I can tell you what happened last week, but I can't tell you what's going to happen next week. But knowing what's happening is half the battle. Okay, so what happened in October? New home prices were lower than a year ago. What does that mean? Well, it either means that builders are saying, okay, we need to build a little bit more economical homes, or it means that those same homes that they were building before are getting more incentives and getting more bargains. So if you're looking to buy a new construction, things are down a little bit. If you looked 3-4 months ago and you weren't getting enough incentives or weren't getting a good enough deal, call me. We might look again at those new homes. But here's a different thing. Existing homes, they actually ended the year really strong, up 5.1% year over year, which means that it's interesting to me. I had some customers that were buying a home. They looked at new homes. They looked at existing homes, and they were drawn to. They were much more interested in a home that was, built in the 1940s than they were interested in a home built in 2025. So there's still this high demand for existing homes. If you've been wondering, is it time to sell? Should I sell my old house? Well, maybe. Let's talk about it. Homes, they hold their value, and all existing homes did really well in December of 2025. They're still holding their value. And so that's kind of what happened in the market last week. Call, text, email me with any questions or concerns. I'd love to help you. If you're wondering, I will say that refinances were up, and I think I had that in a chart in the slide here somewhere, but I'm not sure where I missed mentioning it. But refinances were up quite a bit when rates fell. We got more refinance applications. Now, part of that is because back in COVID, people started spending because they had this extra influx of cash. Sometimes because of the bailout dollar, whatever, the stimulus dollars. I guess that's what they're called. And people didn't really figure out how to stop spending those dollars that they were spending. And what happened is they built back up some credit card debt. So in a lot of the cases, people aren't reaching out to me to refinance just because they go, "Hey, rates are better, I should refinance." They're actually coming to me and saying, "Hey, Josh, we're kind of in trouble. We need some help. We need to do a debt consolidation. We need to do a refinance for one reason or another." So, is this a good time for that? Well, if you're in trouble, anytime's a good time to fix your problems. So, reach out, talktojosh.net, email me at jmcdowell@nexamortgage.com, or you can email me at joshlive@talktojosh.net, or just visit talktojosh.net, schedule an appointment. Let's get together and chat today.